Well, hello, welcome to another trading day right here in Lagos, Nigeria. We see the week is moving along quite fast with de-escalations, bullish sentiment. In some markets, we're seeing pullbacks though. But let's go to the top stories that set your agenda now. We're seeing oil prices at a beast today from a 2-week high, weighed down by concerns about rising supplies and some caution over whether the pause in the U.S.-China trade war indicated a longer-term deal. If that's, even likely at this point. Both benchmarks closed about 1.5% higher yesterday, but we're seeing subdued movement today, $65.07, up 0.17% this morning. WTI crude also sitting pretty above that $60 level there, $62.10, 0.24% up there. Still eyes on this week to see if we get that positive close like the one we got in the previous week of over 5% rise. But is on track for a good week so far, even though the bulls are still, watching what's playing out with most of the tariff talks. To other stories now, we see the federal government has introduced revised insurance regulations for leased aircraft to help local airlines and reduce airfares. The move was announced in Abuja by the National Insurance Commission, NICOM, and the aviation minister, that's Mr. Festus Keyamo. NICOM says the new rules allow operators to access more aircraft and transfers up to 90% of insurance offshore. That's, easing restrictions. Aviation Minister Festus Keyamo praised the move, saying it aligns with global standards and will boost Nigeria's aviation sector. And to all the matters now, in a bid to bridge Nigeria's infrastructure gap, the federal government is expanding its use of Sukuk financing. At the investors' meeting for the 300 billion naira Series 7 sovereign Sukuk issuance in Abuja, Patience Oniha, Director General of the Debt Management Office, she highlighted the government's commitment to leveraging Sukuk for infrastructure development. She emphasized that Sukuk is part of the approved domestic borrowing in the federal government's annual budget, eliminating the need for additional legislative approval. And Nigeria's pension fund assets, that's risen to 32.26 trillion naira as of February 2025. That's according to the National Pension Commission, that's PENCOM. This represents a 1.77% increase from 22.86 trillion naira reported in January 2025, underscoring continued growth and stability of the country's pension industry. The year-on-year growth is even more significant, with the pension fund's net asset value increasing by 17.75% from 19.75 trillion in February 2024 to about 23.26 trillion in February 2025. PENCOM attributes this growth to prudent investment strategies and a diversified portfolio, which includes significant allocations to federal government securities, money market instruments, and equities. And the Africa CEO Forum for 2025 that began in Abidjan yesterday, the capital of Cote d'Ivoire, with the theme, "Can a new deal between state and private sector deliver the continent a winning hand?" It's talking about Africa. Participants from both the public and private sector agree that the continent must respond to current geopolitical trade tensions by looking inwards for funding and development. Our business editor, Inijon Mekwa, reports.
Building closer synergy between the private sector and the public sector. So here at the Africa CEO Forum of 2025, over 2,000 businesses are represented here, and almost all the countries have their representation here. The event begins as the co-host, the managing director of the International Finance Corporation, Mokhtar Diop, is obviously glad that months of planning has resulted in the gathering, but the conversation set for the meetings he believes will make or mar the continent.
Every day without economic integration, it is a waste of growth.
The president of Cote d'Ivoire follows his line of thought.
Normal Africa is going through a lot of issues, access to financing that has been minimized. A lot of countries have insecurity.
And then the session, stop of which is the presidential panel.
Whatever discussions are happening, in the end has to be endorsed, signed off, and owned and appropriated by us as Africans?
We always talk about potential of our continent, but when do we realize really what this potential is all about in reality?
It's an opportunity to lay bare the issues on the continent.
The most important is governance, because governance, as we mentioned, is what allows to create the necessary framework for the evolution of the activities, private activities. The private sector cannot fully play this role if the state is not committed and putting necessary reforms.
You do savings, bear in mind
The need
that
for
you put
good
something
governance also
aside.
runs through the session of tax test, how to increase revenues without a popular backlash. Representatives from the private sector from Rwanda, Ghana, Kenya, and Nigeria share a common perspective on good governance and tax administration.
We can't be talking about corruption and talking about raising revenue. There has to be a plan, and that plan has to be communicated early.
The sessions continue, great conversations with ideas are shared, and the question is, how can these great ideas be achieved? Ini John Mekwa, Channels Television News.
And we'll have Ini later on Business Incorporated to bring us up to speed on what's playing out right there in Abidjan. All right, it's economic forecasting season, and the World Bank projects Nigeria's GDP will increase by 3.6%, while inflation is expected to average about 22.1%. Let's unpack this and other matters now with Mr. Bismarck Urani. He's the CEO of Financial Derivatives Company. Great to have you on the show, sir. Good morning.
Good morning, Ladi. Thanks for having me.
It's great to have you as always. And it's that time again, where most of these multinationals look into their crystal balls and tell us what to expect, for our economy. So looking at this latest one, what do you think are the key drivers behind this projection of a 3.6% GDP growth for Nigeria? And how sustainable is this growth amid structural economic challenges?
Yeah, it's interesting because we have to look at it from three perspectives. One, there was a spring meetings that held in Washington 2 weeks ago. There was the IMF outlook that said that Nigeria's inflation for this year would be 30%, and for next year would be 36%, based on certain assumptions, doomsday assumptions. Then there was the World Bank update, which says that we're going to grow by 3.6%, and average inflation for this year will be 22%. Now, what does it tell you? First and foremost, they say that the aspiration to get a $1 trillion economy is not going to be fulfilled because we have to grow maybe 3 or 4, 5 times more than what we're growing now to achieve that by 2030. So I agree with that the aspiration of a $1 trillion economy is not going to be fulfilled or achieved immediately, except something dramatic happens. But when it comes to the inflation numbers, the inflation numbers of average of 22% is credible. And then it takes me back to our own FDC's projection that came out yesterday, which is saying that inflation for the month of April, right, will be 24.82%. So if that is the case, and when you look at it, while food inflation decelerated, core inflation increased, and monthly inflation, for that matter, when annualized, came up very, very high, to an average of over 3.2% per month, and giving you annualized inflation of about 58%. So what is the real thing? Now, Nigeria is growing. The World Bank says that we need to increase our revenues by lifting the ban on imports, right, so that custom revenues will increase. It says that your GDP growth rate is higher than your population growth rate. You'll be doing better, but not as much as you wished and not as much as you hoped. Like they say, if wishes were horses, beggars will ride. So that's the truth. The economy is limping out of the difficulty of last year. Companies are beginning to report profitability on a quarterly basis, but it is far, far, far. We are so far away from where we want to be and where we should be to optimize our resources.
All right, definitely, we get these projections, and most of the time there's supposed to be some kind of pointer, for you to, somewhat prepare or try to avert, what's been projected. What do you think should be the plan, right now to get some kind of soft landing, for the Nigerian economy with, better inflation numbers that we can actually feel, when we go to the stores?
No, Ladi, what's happening is that most of the projections that were made, the pessimistic projections, were based on the scenario that the Trump tariff wars and trade wars would actually escalate and disrupt things so much. But what we are seeing now is that there's more of rapprochement and more of accommodation, and therefore the Trump tariffs and the trade wars, even though disruptive, will not be as disruptive as originally feared. Therefore, we saw the price of oil come down to $58 a barrel. But as of today, it's at $65, $66 a barrel. Will it stay there? There's a 90-day kind of tariff pause and reduction in tariffs. So there are so many moving parts. But the point is that we believe at Financial Derivatives Company that the doomsday scenario is exaggerated and that the world is not going to go through as much turmoil as was feared. Not to say that there'll be no impact, but the impact will not be as damaging as was originally envisaged. But there are some problems, and that what it does for a country like Nigeria, which is tariff neutral, it means it's a time to look inwards and to press the reset button and begin to boost productivity and growth and optimize the use of our resources. Are we doing that now? No, I don't think we are doing that. We could do much better. So basically, at least what policymakers are doing, they're not disrupting things, but they should be doing some things that will enhance productivity and growth, and that's what we have. But I think it's worth mentioning here that Dangote has brought down the price to 825 naira, and that is significant at this time when global oil prices are increasing. So that will bring down logistics costs. The central bank was told by the World Bank yesterday that please maintain a tight monetary policy. Therefore, if we're to go by what was being suggested and what was agreed, one can say almost categorically, or one can begin to project that the central bank is unlikely to bring down interest rates. I'm not sure that they will increase interest rates, but at least they probably maintain status quo in the meeting of next week. So now coming back to domestic prices, which is what is more important. One is that we have just said now the price of petrol is coming down to 825 naira, which is the level which it was before it increased in March. We are also seeing the price of certain commodities begin to increase, and you can see, for example, that Gari has gone up by 11% to 38,000. We've seen the price of rice increase again. It had come down to 82,000, now back to 84,000. Tomatoes, of course, because of the tomato Ebola, has gone up to 70,000 naira for the big basket. And pepper is up by 12% to 180,000 naira. So all of these things point to you that the cost of making a pot of soup, the cost of feeding, the cost of a meal at a restaurant have all increased because of one, there's not that the demand for it has increased, but the supply has been constrained because of logistics and supply chain disruption.
Yeah, it's quite interesting you mentioned the pot of soup there, because I remember there was a time you could use like 5,000 naira to make a nice, sumptuous pot of soup, but that's we don't see that.
Now you need 50,000 to make that pot of soup.
50,000, right? Yeah, especially for those that like protein and taste and all of that.
Tomatoes is 70K, and so if you cannot get the soup, the stew to be red enough, you have to use carrots or something else as a substitute. But definitely, there are some hard times ahead, and this is the planting season. But let's wait. Maybe later on, in about 2-3 months, when we start having the harvest, we would see the price of a pot of soup begin to come down. But also, I want you to note that the price of cocoa is at $9,000 a ton, which is great news for Osun, Oyo, and Ondo State, where the center of gravity of exports of cocoa, and that means that their revenues are 400% higher than what it was 3 years ago. So that's one area that we're having a boom. Okay, so it's not all bad news. There's some good news, but
there's some
like
good
I said,
news. Yeah, there's some good news. That
and they say, sell in May and go away. That's what they say all the time.
right, but it seems that narrative is not working. This May, because we're seeing some kind of rally. With some of these markets now. It's just maybe gold that's not doing so well, at this time. But I think there's a recovery. So I think it's about staying in May at this point.
No, stay in May. No, I think we'll still sell in May and go away, but don't sell everything.
Okay.
That's the thing. Sell some and don't sell your Bitcoin. And you guys are into the Bitcoin space, right? Bitcoin is over $100,000 already. So again, this is different. This May is different because there's a disruption. There's Liberation Day. There are all sorts of things happening in the Middle East and in Crimea and Ukraine. So it's not a normal May. So that we would sell in May with a caveat, but don't go away because you may need to.
Maybe sell in May and stay close.
Oh yes, sell in May. Sell in May, but don't go away.
Don't go away.
That's it.
All right. I'm talking about not going away. We're seeing oil prices getting back looking comfortable above $60. Do you think sub 60 is behind us in the short term?
No, I think two things happened here. One, the Saudi Arabians and OPEC Plus are saying they are now going to restrict their output hikes because that was what brought the price down. And now that Mr. Trump is in the Middle East, in Qatar, in Saudi Arabia, I think some kind of rapprochement will happen there. So we will see oil at about $60 or $62 a barrel. Don't forget, our break-even point is $60 a barrel, our fiscal break-even point, where we have fiscal neutrality. Therefore, while we'll not be swimming in money, but at least we'll be able to get by. But the truth and our future lies on how much we can dig deep and increase productivity, especially in the non-oil sector. But we need to invest in our oil sector. We've had people like Seplat and others, both onshore, offshore, and deep water. We need to invest and bring additional money here. Now we have to create the environment. But two things that are important. One is that the money that comes in, how are we deploying it without having it leak? And two, how do we distribute this income in such a way that the rich do not get too rich and the poor do not end up in abject poverty, because you know that we have a poverty issue here. We have a debt issue, we have a poverty issue, but we need to distribute more equitably and fairly so everybody's carried along. I think that's the key to this question.
Right, and let me take you to the stock market. Now, we did touch the 109,000 level. That's for the all-share index, but it seems that it's hitting or is about to hit some kind of resistance, from the previous high. What are you seeing? Are you seeing that resistance, broken in the short term, or do you see coming back down? That's for the all-share index.
No, I do not think that the stock market is going to come back down. Let me tell you why. The truth is that for 2023 and 2024, companies were reporting significant losses due to exchange rate translation losses, right? So now most of these companies have domesticated their international debt. That is due to their parents, due to suppliers, and therefore their debts are now on their local balance sheets. So if you look at their performance in the first quarter and possibly into the second quarter of 2025, we are seeing that on a quarterly basis they're breaking even. You saw the MTN had their AGM, and they said categorically that by the first quarter of 2026, they should be able to distribute dividends. The tariff increase on telecoms kicked in March. There are certain things that are happening in the power sector. Hopefully, we'll get some reprieve there. But also, we are seeing that logistics costs are coming down because thanks to Aliko Dangote, who is the white knight here, who has helped us get to bring down our cost of petroleum products. So having said that, so if your logistics costs down, the Naira is not depreciating as fast as it was by this time last year, that we are seeing money supply management being controlled by the Central Bank of Nigeria, it's only fair to say that most of these companies that are interest rate and exchange rate sensitive will do better in 2025 than they did in 2024. Therefore, if the stock prices today are the present value of future earnings, it means that those stocks are going to be doing better in real terms. So I wouldn't panic. That's why I said, don't sell in May, but stay, don't go away. That's why I say that again. So we'll see some things begin to happen. We've seen Presco, we've seen Okomu, we've seen some of these companies, Guinness, Nigerian breweries, most of them who were reporting red ink last year are now in black ink again. And so it's looking good for now.
Fantastic. Thank you so much, Mr. Ronnie, and let's hope we get more white knights in the private and public sector going forward. Thank you so much for coming on. Always great to have you.
Thank you for having me.
All right, still ahead on Business Morning. We see the World Bank says Nigeria must end wasteful electricity subsidies. We'll discuss that next. Do stay with us.
It's not.
Welcome back. Well, the World Bank has labeled Nigeria's electricity subsidy as wasteful and regressive, warning that it undermines economic gains from recent reforms like the petrol subsidy removal and FX liberalization. In its 2025 Nigeria Development Update, the bank revealed that Nigeria spends 200 billion naira monthly on power subsidy funds, argues that this could be better invested in improving infrastructure and social services. All right, let's discuss this now with Barrister Sunday Oduton, is the CEO, Association of Nigerian Electricity Distributors, joining me right here in the studio. It's great to have you, sir. Good morning.
Good morning.
Yes, and shout out to Band A, customers. We know the pain, that we're going through right now. And, going back to the fuel subsidy removal, we're still in pain there. And now we're hearing the World Bank saying we must end the wasteful subsidy in the electricity sector. So talk to me about this.
Okay, thank you very much.
Yeah.
I think we all need to understand, when people talk about pain in Band A,
Right.
I think it's that people don't understand what the government is trying to do.
Okay.
Or we don't even know the essence of having a 24/7 electricity, minimum of 24 hours on average, 24 hours, 20 hours to 24 hours. Now, talking about subsidy first, we need to understand why there is subsidy, what subsidy is all about. Subsidy is just a measure to bridge the gap between cost-reflected tariff and the regulated electricity rate. So, which means if the landing cost or the cost of production is 206 naira, and then government now say, okay, this is too much for people to bear, let them be paying 68 naira. So the difference between 68 naira and 206 is the subsidy. But the question we need to ask ourselves is, one, can Nigerian government carry this burden far? Two, have they been able to pay as I went due? If not, shortfall has existed over the years in the system. What is the implication of the shortfall? The shortfall has led to more inefficiencies on the part of the value chain. And when people talk about disco, any problem in the power sector is not limited to the disco, who, of course, we're the one we're the one below the value chain, but it's all about the whole of the value chain. Because if the generation company generates enough, and the transmission company can transmit it to the distribution companies, and the distribution company can distribute everything that has been transmitted to them, all of us will have an alignment, seamless. That is not the case. We are not where we are supposed to be,
So we have
but
a
we are
break
where we
in
are
transmission
today.
somewhere.
We have across the board.
Okay.
So we are not where we are supposed to be. We are where we are now because there is a lot of liquidity crisis. And I'll tell you something about subsidy. In 2024, the government subsidy amounted to 2.4 trillion naira. 2024. And in 2023, it was 650 billion naira. So it increased to 2.4 trillion. In December 2024 alone, the subsidy was 199 billion. What was the cause of this? Inflation, exchange rate, and adjustment in power generation capacity. Now, January 2025, subsidy was 178.3 billion naira. And for the whole of 2025, the projected subsidy is 2.36 trillion naira.
It keeps going up.
This is not sustainable, this is not efficient, and this, in fact, fuel corruption because we don't have an effective template. We don't have a system that enables us to give subsidy to the right people. You cannot continue to give universal subsidy. Why should you, for instance, subsidize Chief Sunday Odunto? Why should you subsidize Mr. John Momo? Why should you subsidize Mr. Aliko Dangote? Why should you subsidize Mr. Sanwo-Olu, Mr. Babaji Sanwo-Olu, or Prince Dapo Abiodun? These are people that ordinarily should be able to pay the cost of their electricity. However, if you have a good system where you can actually identify the needy, where you can actually get those who really need the help, we are not against subsidy.
Right.
But I'm saying that what we have at the moment...
Well, it seems, subsidy has put a sour taste in the mouth of Nigerians, somehow, because it just feels like regardless, of the subsidy, there's still some kind of suffering, at the end of the day. Let's take, for instance, now some lessons from global reforms, some other countries. Let's start with Indonesia. If you can put that up for me. We see they remove fuel and electricity subsidies gradually for over 3 years. But we have a thing for just taking off subsidy, just like that. We saw the result there. Inflation spiked briefly, 5.1 to 8.3%, but stabilized with social welfare programs. Lesson learned there, phase removal plus safety nets. That reduces public anger. Saw the same thing in Egypt. They cut power subsidies for industries first, then, households. Industries adapted with solar energy. Household tariffs rose 45%, but blackouts decreased.
Okay, let's look at it this way. In fairness to the Nigerian government, this issue of electricity subsidy, I'm concerned with electricity, and I'm not speaking for the government. There are some of these questions that are better put to the government or the Minister of Power. But in fairness, the issue of removal of subsidy in the electricity subsector started with the removal of subsidy in the case of Band A customers. That's a gradual. We started with Band A. Now, it is only fair that subsidy, as far as customers on Band B is concerned, should be removed. And I'll give you one of the reasons. If you are in Band B, you are getting electricity for an average of 16 to 19 hours. So you're getting 19 hours, you are paying 68 naira per kilo hour. Another neighbor or another gentleman elsewhere who is in Band A is paying 206 naira. See the difference between 19 hours of supply, you are paying 68 naira. Another man, 20 hours of supply, is paying 206.
Which some say they don't get up to 20 hours.
That is not sustainable. When you're talking about service delivery, or whether people are getting the service or not, that's a different matter. And it's not in all cases that this thing occurs. And where they are not getting the service, right now, the regulator is very strict on what has to be done. And this code don't migrate people to Band A without the regulators' approval. The regulator actually asks us to upgrade or get people to Band A. In Surulere, here in Lagos, I know of an area in Masha area, Adelabu and all those areas. They were protesting. They said they didn't want Band A. They didn't want Band A, but they like to have almost 24-hour electricity. Right. As I'm talking now, they have light. And when you have the service, you should be prepared to pay for it. What I think we should be looking at is, okay, if we remove subsidy, as we did in the case of Band A customers, let every single customer in Band A be metered. And before you start pushing back against the discos, you are not metering, everybody should go and look at the metering policy, who actually supply meters, how it is done. We are just participants in the market. We are not the one that actually own the meters or go and produce, supply, or install the meters.
Because it takes so long, you know, when you request for a meter.
It takes so long
to get that meter.
That's why I said we are not where we are supposed to be. And instead of pointing accusing finger at anybody, we should all be looking at how best to improve the service and the system. For instance, we currently have a very terrible regulatory fines that are totally unfair, which NEC is doing now. How can you expect me to repair faulty meter within 3 days or 48 hours, even 4 days, in a large franchise area, and I have like 500 or 200 meters to be replaced? Or
maybe employ more people to fix it.
You cannot when you employ more people, you see, it's easier said than done. And talk is cheap. And the moment you keep on slamming me with 800 million naira fine, 130 million naira fine, it will affect me being able to even repair your transformer when it is faulty. Let us look at everything both ways. Let us look at how best we can deliver the service and make the system better. Let us look at how best we can serve Nigeria better. We cannot continue to do things and just look for, especially discos. Oh, discos are this, discos are that. People forget we are operating within this same Nigerian system. Everybody has a role to play. I'm not saying discos that we're doing enough. We're not even efficient enough. That is a fact. But show me any aspect, any part of the value chain that is efficient enough. None. Show me or tell me whether even the regulator is doing enough. They've done a lot of fantastic things, but I just mentioned very harsh, unrealistic regulatory fines that is more or less putting us back, not helping the system. But I also agree that sometimes they have to put in these regulatory fines, but it has to be measured. Not that you just slam a disco 1 billion naira fine. When you find somebody 1 billion naira, how do you expect them to get the money? Or you limit and reduce their operational expenses. And now I can't even get fuel in my truck to come and replace your pole.
So what would be the suitable time to get a meter fixed?
Again, it depends. It depends on our partners, the meter asset providers. The meter has to be available. Their personnel has to be available. There has to be that collaboration. Instead of focusing attention on the disco, the discos are the ones that are not. I don't control the meter asset provider. These are separate entities. These are companies that are accredited by our regulators. So people need to understand how the system works.
Do they get fined too?
I don't know about that.
Right. So
but I know that for every little thing that happens, the disco take the amps, both from the customers and of course from the regulator. We cannot continue like this. And when you start talking, discos are this, we want to do this to them, it's very easy to say
so
things.
What would you say is the way forward, at this time? Because
the way forward is very simple. There should be collaboration, cooperation, and alignment. There are 3 words. Simple thing. From the government side, Ministry of Power, to the regulators who are also government agencies, states, of course, service provider operators like us, the discos, transmission, and of course, the power generators. Because at the end of the day, if we don't work together and everybody keep doing their own thing, it will not work. Alignment means if we are generating 10,000 megawatts, we must put in place a system, equipment, investment to enable us to transmit 10,000 megawatts. We must put in place a system, equipment, and infrastructure and investment that will enable us to distribute 10,000 megawatts. That will be 10, 10, 10. Generation 10, transmission 10, distribution 10. What do we have? A misalignment, total misalignment. What do? We point accusing finger. We look for somebody to blame. And the soft target, of course, are the discos, because we're the one that you know, we're the one that you see. If I'm not able to give you the hours that I require as a Band-Aid customer due to unavailability of supply to me from Transmission Company of Nigeria, for example, who do you blame? You blame me, the discos. The other time we were beaten by soldiers in Topo Badagry. Why? Because we were not able to supply them power because there was a problem, a maintenance going on by the Transmission Company of Nigeria. Who did they blame? Discos. Who did they beat? Discos. So we are the one that take all the arms. Yes, it is time for Nigerians to be realistic and stop blaming the disco for every problem in the system. And when you're talking about reform, Mr. Minister, good to reform, good idea, talk is cheap, but as you are doing it, please do it in a fair manner, in a way that the whole value chain need to be aligned. Not just picking up disco. We do disco. We take one from the south, one from the north. As if reform has something to do with, what they call it, this national thing that you have to balance. You take one from the north,
right,
one from the south. It shouldn't be about that. It should be about a holistic approach to solve problems, not political talk.
Right. So, definitely we've heard this before about, taking off these subsidies that the government cannot afford it and all of that. So all of these, misalignments, that we'll talk about, we have to get that solved before we even start thinking of taking out the subsidies.
No, taking out the subsidy is part of steps that will align the system.
Because that will align the system.
Oh, yes, because if you cannot pay the subsidy, why are you retaining the subsidy?
But it'll be, the customers will be hard hit.
Not that. I'm saying that if you have correct data, the right type of data, you should be able to know those who are in need. You have to help the needy in the society. And that's why I mentioned Mr. Babajide Sanwo-Olu, who should not be subsidized. But when you have universal subsidy for everybody, the whole class of people in Band B today are being subsidized. Why should you be subsidizing a millionaire? But if you know of a pensioner,
there's a cost
an old person, somebody who is weak,
we know there's a cost of living crisis. There's a cost of living crisis right now. And the ones that we think are millionaires might not be millionaires, because everyone is taking a hit, at this point. But still, the vulnerable, we should prioritize.
I will use you as an
vulnerable.
You should not be subsidized.
Okay.
You are working with channels, you are well paid.
Right.
And I have an idea of what it is.
Okay.
For that reason, you are not supposed to be subsidized. No, you shouldn't be.
Even though
we should give subsidy to those who are in need.
Right.
And to do that,
I get that.
We should have correct data. Nigeria don't even have the data.
Right.
When you ask people that BVN and NIN should be linked to the electricity bill, they will push back. But if we have a system that enables us to know the old, the weak, even within the Band-Aid customers, there will surely be some people that wouldn't help. The government should find a way to do that.
Some days I'll surprise you. Some days I don't have up to 50,000. I won't lie to you.
And because
there are some days like that. But let's look at this metering thing. Now we've had a couple of initiatives. The presidential metering initiative. The target was 10 million to deploy at least 10 million meters. That was government funded. We've also had distribution sector recovery program, about 3.2 million meters, meter acquisition fund. So there have been so many, initiatives regarding this metering quagmire. What else?
Well, the truth of the matter is that we still have so many Nigerians that are not metered. And I keep saying that if somebody is living within the Band-Aid bracket, every Band-Aid customers ought to be metered. If you don't give them meter and you are estimating them, it is evil. They will not, the incentive to pay will not even be there, where they are supposed to pay. So the question of what method or what system we should use on metering is a question for the government. The government are solely in charge of their own decision on how best they want to go about it. And in the last 11 years that I've been within the system, I've witnessed different type of metering initiatives. And you can ask yourself, as a stakeholder, whether it has worked. For me, it hasn't really worked well. I mean, we should get to a point whereby we can take a cluster or an area or a place and we meter the whole of that place. Then the issue becomes who pays for it? How do you recover the cost? The meter manufacturer needs to be paid. They also need to be given incentives to be able to supply. You give them loan at single-digit rate. But sometimes we go through a very long distance, we still come back to the same point. We talk, one government after the other, one minister after the other, we buga. At the end of the day, the result is not there. That's the truth. All these metering things should not be a big deal. We know those who don't have meters. We know the area that we need to open up and meter them. The issue is how do we do it and make it seamless. I've seen meters being taken recently to a place in Surulere. They wanted to replace the meter. The customer had a three-phase meter. The customer had a three-phase meter, and you took a single-phase meter to the premises, knowing the load, seeing everything there. Is that right? That's not right. That means that meter manufacturer, that meter supplier, meter set provider, they have not done their homework. There's something wrong when it comes to the synergy between the DISCO and that meter manufacturer or meter supplier. This is the kind of system I expect the government to look into. But when we are busy pointing accusing fingers, giving excuses, looking for, we as DISCOs, as ANED that represent the DISCOs, we don't come here and tell you DISCOs are fine, they are the best, they are doing well. No, I'll tell you first and foremost, they were very inefficient. I've been saying this for the past 10 years. Say your own first. Tell us your own problem. But don't blame others without blaming yourself. And the moment
you must accept
we
your
hear
flaws
that from
too.
the government side, we'll be happy. Yes. So what we are having today, the system is not working the way it should be working. You don't tell a DISCO or a service provider to replace faulty meter within 48 hours. Even to take a car from here to Ikorodu, and how many of them can you do in a day? And when you say employ more people, well, tell the meter asset provider to employ more people. That will increase their costs. So all these things we have to all look at and see what best will work for the system. And in doing so, we should not be blaming government, or we are blaming DISCO, we are blaming NEC. No,
so
we should work together. I said it, collaboration, cooperation, and alignment. I'll be saying this.
And we'll see some transparency in there.
No, that's part of it. When there is alignment, there's collaboration, cooperation, we sit down, we talk, we look at things, then transparency will happen. And everybody should know the cost of everyone else. If you know my cost, you know how best I can recover my cost. And if I'm not doing the right thing, you then put the guillotine, you deal with me the proper way. But not selective and say, oh, we want to do this. We are looking at weak DISCOs. We take one from the south, we take one from the north. That alone says something. Why do you have to make it a geographical thing? If Ekwa and Ikeja Electric are the weakest DISCOs that they are not doing well, unperforming DISCOs, they are fantastic anyway. But if they are not performing, then do your pilot with Ekwa and Ikeja. Don't say you have to take one from this side, as if it is a political thing.
Like a geopolitical zone thing.
It shouldn't be about that kind of thing.
All right. We'll take. We'll definitely, keep this conversation going because it's still with us, regardless at this point, and we do hope for better days, ahead. Affordable electricity, constant, and everybody's happy. Hopefully.
And cost-reflective electricity.
Cost-reflective. Thank you so much. Barrister Sunday Oduto is the CEO, Association of Nigerian Electricity Distributors. Thank you for joining us today. All right, we'll take a break now. When we come back, we head straight to the global space. What's driving sentiments there? That's in a moment. Just stay with us. Let's get a check on what's playing out in the global space now. Starting with the UK. See, the labour market cools right there in the UK. Unemployment rate rose in March, according to the data, as employers anticipated the impact of higher employment costs even before the potential impacts there of US President Donald Trump's volatile trade policies. According to the Office for National Statistics, the jobless rate rose to 4.5% in 3 months to March as expected, but up from the 4.4% seen in February. China, also moving on to China now, China has removed a month-long ban preventing local airlines from taking delivery of Boeing planes. According to reports today, just shortly after Beijing and Washington agreed to a de-escalation in their trade war, government officials have become more endearing now to most of these policies now, and we'll see some kind of synergy between both countries. But people are still watching, at this point, hoping there's no switch, and definitely we know the markets will react to that. Then we see the U.S. State Department, they've authorized sale of about $1.4 billion worth of military aircraft and equipment to the United Arab Emirates, coming just ahead of President Donald Trump's visit to the region this week. The principal contractors for the sale will be Boeing and Honeywell. That's trading. Honeywell is trading on NASDAQ and the other on the New York Stock Exchange. That the United States saying they'll cut the low-value de minimis tariff on China shipments. We see further de-escalating a potentially damaging trade war between the world's two largest economies. The tariff relief comes in the wake of Beijing and Washington announcing a truce in their trade spat after weekend talks in Geneva, with both sides agreeing to unwind most of the tariffs imposed on each other's goods since early April. All right, now, in an effort to tackle rising prescription drug prices, the United States has explored the implementation of the most favored nation drug pricing policy. This approach aims to align U.S. drug costs with those of other economically advanced countries where prices are often significantly lower. Let's talk to Amanda Wolverton now. She's a global marketing executive who joins me. Great to have you on the show.
Thank you for having me.
So talk to me about this most favored nation drug pricing policy and how it aims to reduce prescription drug costs in the United States.
The executive order that issued by President Trump aims to reduce the price of drugs, not only for Medicare, Medicaid, as well as potentially covering the commercial sector. There are four measures that aiming to reduce the overall cost of drugs. The first one is really benchmarking the drug prices in the United States to other lower cost drug prices in developed countries. For example, Canada, EU, Japan. And the statistics, market research has shown that the prices in United States of drugs are typically 2 to 4 fold higher than those countries. So number one, benchmarking. Number two is giving the mandate to the Health and the Human Services, currently headed by Robert Kennedy Jr., to actually negotiate with pharmaceutical and drug manufacturers in 30 days to reduce the cost of drugs. If that doesn't work, they would have 6 months, 180 days to really make that work is the second phase. And then if that doesn't work, basically the Health and the Human Service Agency will have the power to, according to the executive order, to reduce force or rulemaking to reduce the cost of drugs.
Right.
Third,
and definitely, I did see, some pharma stocks, they react to that news yesterday, that most of them dropped. I will see if we'll get some kind of recovery at some point. But which sectors of the pharmaceutical industry are most affected by the implementation of this MFN policy?
I think that the question would be which sectors are not affected. I think the impact will be globally felt by most of the pharmaceutical companies in the United States. For example, that in a couple of days ago, they issued announcement saying that according to their estimate and study, over the next decades, the pharmaceutical companies will suffer about $1 trillion cost, according to loss to this executive measure. As a result, they contended that this would reduce the access to drugs for the patients, as well as slowing down the R&D research for new drugs.
Oh, definitely a huge impact there. We're already seeing most of those stocks react to all of this. But what are the potential legal and political challenges that could arise from the enforcement of this policy?
Just a little bit side notes to the impact to the reprieve of the stock impact, because many of the market analysts argue that they actually 6 months to negotiate the deal, which is very much similar to what happened to the tariff, meaning that there's going to be a lot of room to negotiate and maneuver. So actually many of the company's stock went up yesterday significantly, about 5 to 6%. Going back to your question about, can you repeat your last question? Sorry.
Yes, most of the impact there, because definitely you've talked about negotiations coming, but there's also that legal side of things. Who's going to win? When it comes to the negotiations.
Yeah, a very good question. I think that they definitely. Similar to historical what happened in 2020, that when in the first term of Trump's presidency, and they challenged Trump, who attempted to issue something similar to this measure, and that was challenged in court, and then court actually blocked the measure because of procedural issues. And then later on, when President Biden went into the White House, and he dropped the issue. So, but this time, I think we would predict at least that the pharmaceutical company would challenge it again in court. But also, I think there may be, in my personal view, less conventional congressional challenges, because actually there's some Democrats are supporting this measure and trying to introduce this in Congress.
All right, definitely. We'll keep watching and see how the negotiations go. But at the end of the day, we know the markets react immediately, but we did see that reprieve there with most of those pharma stocks. Thank you so much, Amanda Wolverton. She's a global marketing executive.
It's never boring here.
Thank you so much. Thank
you.
All right, that's Business Morning today. Thank you so much for watching, and definitely we'll be back again at 1 p.m. to tell you what's playing out with most of the markets that we track. We'll tell you what's playing out with the stocks, Bitcoin, and most of those commodities. Thank you so much for watching. I'm Ladi Williams from me and the team right here at Channels HQs. Bye for now.